Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius and Anucauskas. Today is the 4th of September 2019, so welcome everyone. Welcome to this Wednesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so also just a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD bank website, but specifically our JFD research page, which you can always check out on a daily basis, and we provide various different analysis on different instruments, and I believe you can find some of them useful, so feel free to check us out here. But for now, let's quickly jump into the charts. Now, the first one I want to touch on very quickly here is gold. I looked at this one previously, and I was saying that we need to see a clear breakthrough, one of our key levels first, before we could kind of consider any further directional move. So yes, of course, overall gold is within this uptrend, trading above this nice upside support line taken from the low of the 30th of May. But as you can see, it's currently stuck here in this kind of somewhat of a range, roughly between the 15, 16, 17 zone on the downside and the 1550 area on the upside. So in a way, we're waiting for a clear breakthrough one of these levels before we could consider a further directional move. So in a way, with the upside here, if we see a push above the 1550, then that's good news. But just for that extra better confirmation, ideally a push above the 1555 could kind of do the trick here, as this would confirm a forthcoming higher high, and we could aim for the area near the 1590 and a half, 91 maybe, something like that, or in a way we could just initially target the 1590 and then we'll take it from there. Because the 1590, just let me show you what that level is, or what that level was in the past. I need to kind of go back here a little bit in time. Let me just quickly scroll this one back. This is basically the high of April. Sorry, it's the high of the 11th, if I'm not mistaken. I need to zoom in this a little bit, can't really see. So basically this is the high that I'm talking about, and this is around the 9th of April, yep, 2013. So basically this is how far we've gone again. So we are at these levels and we're not far from these levels. So basically the 9th of April 2013 could play out nicely, could be that nice potential target here. But again, before we could consider that 1590 level, we need to see a clear breakthrough initially through the 1550 and then the 1555 zone. In terms of the downside here, very straightforward here. We need to see a drop below the 1516 zone before kind of examining slightly lower areas. And again, this move lower could still be seen as part of a correction, because we're, like I said, we're still within an uptrend, and this move here initially could bring the price towards the psychological 1500 level, but slightly below that we do have a nice good area of support near the 1493 zone. So as you can see previously, back here on the 19th of August and also around the 22nd of August, it acted as a fantastic area of support. So that's why initially we're going to target that if we see a drop below the 1516 zone. Until then, I mean, until it's kind of trading in between these two levels, we're going to remain neutral and just continue observing the price action. Jumping into WTI oil here very quickly. So as you can see, it it did slide from it was sliding from the beginning of this week, but yesterday we saw a bit of recovery here, a little bit of recovery here, but after it kind of reached the low near the 25th of August and near the 52.95 zone, so it did kind of overshoot it a little bit, but the bulls were quick kind of to push the commodity back above it, and in a way this is where we're going to be looking at here right now. So we do have a small tentative kind of downside resistance line here running from the 13th of August, so we're going to keep a close eye on this one. And also, as I've just said, we also have this strong area of support, which kind of is holding the commodity from moving lower. So in a way, what we could do here is continue observing this, and how you could position yourself, potentially could position yourself here, is if we get a nice push above the 54.33 zone, something like that, then you could start considering slightly higher levels, but probably we could get a little bit more excited with the upside if we see a push above the 55 mark here. But again, we will aim for slightly higher levels. We'll aim for the 56 zone, 56 and a half maybe, but only up until this downside resistance line. So in a way, if I'm going to draw an arrow here, this is our little upside scenario for now, and then we'll take it from there, see what he wants to do after. But again, like I said, in terms of the upside, short term, very short term upside, and we need to see a push back above the 55 zone. In terms of the downside, well, as you probably understood now, we need to see a clear break, and ideally maybe a close of a daily candle below this 52.95 level before kind of we could examine further declines. So keep your eyes on this one. Very interesting developments here happening. I mean, so far it's kind of let's put it that way, maybe moving somewhat sideways, but there are some good interesting levels to watch. Jumping into a few pairs now very quickly, USDCAD being the first one, and I keep talking about this one from Monday. I kept talking about this one from Monday, and basically what I was saying that and yeah, this is what I was saying yesterday in my traders tea time. During the tea time, we saw this one breaking above the 1.3345 level. I mean, this was a good sign. We had a nice close of a 4-hour candle above this, but in a way, what I was saying, that ideally we would like to see a close of a daily candle above that level, above that 133.45. And again, for the second day in a row, we had this false breakout above this level, and then now we can see that the pair is back inside this range again. And look, like I said, looking at this daily chart, it's not really looking good here for USD CAD. That said, we have the Bank of Canada today, so we might see some interesting developments, some interesting moves here. So that's why be very careful, guys, today. Check out the calendar when it's going to be, when that Bank of Canada release is going to be in your time zone. So check the economic calendar. But looking at this picture right now from the technical perspective, from the technical side, again, we remain with the same level here. We need to see a nice good pop above the 1.3345, and ideally a daily close above this level before we could examine further upside. For now, we can see that the pair is back in this range, but in order to aim for slightly lower levels, we need to see a drop below the 1.3310 zone. This one right here so far, because for now, like I said, we're going to be somewhat neutral. We need to see a drop below this 1.3310 in order to kind of consider slightly lower levels. And this is also what I've showed you yesterday in my video, in one of my videos. Basically, keep an eye on this little tentative upside line. So in a way, it could play out. It could in a way initially stall the rate from moving lower, but again, because it's such a tentative line, do not focus on it too much. Have it on your chart, but the main things that you need to focus on here, of course, are the 200 EMA here on the 4-hour chart, and the 1.3248 zone, approximately around there, which is kind of that lower side of that range, of this range here. So keep your eyes on this one. Also, one of the pairs that I've talked about yesterday, and basically this is what I was saying, that If this USDCHF continues to trade within the rising channel, but if this little tentative upside line breaks, this is where, and if we see a rate fall below the 0.9877 zone, then this is where we'll consider a possible move lower. Now, looking at this picture, you can see that this is what happened yesterday. We did get a break below this upside line, so in a way this is no longer valid, and this is, like I said, this is what I was talking about yesterday. And now you can see that the pair is kind of getting held. It's trying to make its way higher, but it's currently struggling to push above the 0.9877. If it continues to struggle to do that, well, there is a good chance we could see another slide here. We could see this one moving lower. The only thing is that now, in order to be kind of more on the safe side, we will shift our breaking point here to here, and if we see a nice good slide below the 0.9854, 55 area here, then yep, we will continue with the downside. And this is what I was talking about yesterday. Initially, like I said, if we see a drop below the 0.9877, yes, there could be a good chance for this one moving lower. You can see that it did move lower, but got held near this 0.9855 area, from which it rebounded and made its way a little bit higher. But now, just to be, like I said, on the safe side, we need to see a drop below this one here. This would confirm a forthcoming lower low, and we could see this one sliding towards the 0.9794, or even maybe towards the lower side of the rising channel. Who knows? For now, like I said, let's not over speculate on this one too much. For now, let's keep an eye on this level here. And with the upside, well, it's a little bit difficult here, to be honest, because it may travel higher, may test this upside line from underneath, and then maybe reverse back to the downside. So there could be a possibility of this of such a move, but let's say if we, here right now at this point in time, in order to kind of, let's say, take a more positive approach in the near term, ideally we would like to see a push above the 0.9929 here, near the highs of yesterday. So if we get a nice push above this, then yep, we will aim higher. For now, we're somewhat more bearish than bullish on this one. Let's see how this is going to play out. Very quickly, I wanted to mention AUDNZD. Maybe you don't look at this one very often, but it's quite interesting right now because of course we can see that it continues to push higher. It is trading above this this upside support line. Let's put it that way. This one's taken from the low of the 5th of August. But what I also wanted to show you is that, in a way, what we could draw here is a possible rising wedge formation. So and of course, according to textbooks, these tend to break to the downside eventually, but of course, until kind of the lower side of this wedge is not broken, we cannot really talk about the downside. So in a way, looking at some of these levels here, of course this continues to push nicely to the upside, but in a way there are some good potential targets above here, and one of which could be this one right here. And let me just quickly put this one on the chart. There we go. No, not this one. This one right here, around the 1.071315 zone. So keep your eyes on that one. This is where the pair might get stalled. And actually, let me just track this one more accurately. This is the one that I'm trying to capture. So yep, the 15 zone, the 107.15 could be that nice area of resistance. It's just slightly above that. We do have that little peak here near the 1.0726. Also could be a nice target, but again, be very careful here. Like I said, we are within this potential kind of well, I wouldn't actually even say potential, but we are within this nice rising channel, rising wedge formation, and these tend to break to the downside according to textbooks. But of course, until we see that break through the lower side of it, we cannot really talk about the downside. So in a way, for us to get slightly more comfortable with lower levels, we will start considering lower areas if we see a drop below the 1.0649 here, and or even, let's say, if the reverse will happen earlier, then we'll consider this level here, the 1.0629 zone, and only then on a break of those two, we will aim for lower areas. For now, we are stuck here still within this formation. The path kind of holds currently still to the upside, but there are some good potential areas of resistance here, like around the 1.0715 or the 1.0726. So keep your eyes on this one. So in a way, something like this could happen potentially, where we could test those levels and then maybe reverse back to the downside. So again, this is one of the scenarios. Again, if we start breaking the upper side of this rising wedge, then ignore all this. I mean, we could see this one pushing further north, but again, we'll consider that only if we see a break of this upper side of the rising wedge. AUDCHF, very quickly on this one. I talked about this one previously because it was stuck here in this nice range, but the upper side of the range at 0.6670 got broken yesterday. Or should I actually, yeah, actually it was yesterday. It got broken, and the pair traveled higher and now currently balancing near its R2. Of course, this kind of increases the chances of a further move higher. We could see this one pushing further north. The only thing is that if we do see this one moving higher, and if we do see this one aiming for the 0.6740, yes, that's good news, because this is going to be our next level, and this is around the R3, today's R3. We could maybe see a test of that level, but again, don't forget that we're still within a downtrend, and all this kind of move higher could be seen as a temporary correction. That's why, guys, for now, yes, we are, like I said, we are pushing higher. We are above the 200 EMA here on the 4-hour chart. It is currently flirting with the R2. Let's see if the bulls have enough steam to push this one towards the R3 near the 0.6740 level. If they don't, we could see this one correcting back down a little bit. The only thing is that now, in order for us, let's say, to consider slightly lower areas, ideally what we're going to wait here for is not only a push back above the 0.6670, but also a push back above this upside support line. A bit of a tentative one, I do understand that, but still we're going to keep a close eye on it, and just for that better confirmation, a nice good drop below this could lead the way to back down here a little bit. GBPJPY, very quickly on this one. So of course, as you probably are aware, there are some good positive developments around Brexit, and the parliament is kind of trying to vote to delay the Brexit, and again, so the market is taking this as a nice positive thing for now. I mean, this is going to continue ongoing, and for now traders are seeing good signs here, and they're seeing good positive developments. So that's why we're seeing the British pound picking up again and pushing higher. And this is what I was talking about yesterday in my one of my videos, and basically a push above the 128.15 zone could in a way do the trick here for the bulls. We could see this one pushing higher again, pushing towards this downside resistance line taken from the high of May this year. And but again, until it's kind of trading below this downside line, we're in the medium term we will remain bearish. But again, like I said, from the very short term perspective, you can see that the pair is trying to make its way higher, and we will continue aiming for slightly higher levels here for now. The first target for us is going to be around here near the 129.3230 zone, approximately around there. This is where the rate could stall initially. We could see maybe this one correcting back down a little bit, but again, for now it seems that the momentum is positive, and we will continue aiming slightly higher. And the last pair I wanted to quickly touch on, not going to spend too much time on it, that's euro dollar. So I talked about this one yesterday. So after the pair kind of failed to move further below the 1.0929, it did reverse back to the upside, but it got held near this level here, near the one that I was talking about yesterday in my video, the 1.0975, and you can see it's currently balancing around it. If we get a nice good push above it, then yep, of course we will continue targeting slightly higher levels. We will aim for that psychological 110 level initially. But the more important level for us is going to be this one, the 1.10, 20, 24, 25 zone, approximately around here. If that gets broken, then we could see this one moving for a larger correction. And the reason why I'm saying for a larger correction, because we're still trading below this downside resistance line taken from the high of the 24th of June. So any kind of move higher towards it still will be seen, it will be classed as a correction, as a larger correction. So that's why, guys, or should I say, the long-term bulls kind of shouldn't get their hopes up too yet. In order to, let's say, to aim for much higher levels in the medium term, at least, we need to see a break of this downside resistance line. For now, we're struggling to kind of push above the 1.0975. If it continues to struggle, then we could see this one reversing to the downside. The only thing is for us now to get comfortable with further declines. A drop below the 1.0929 is required here. So this way the pair would confirm a forthcoming lower low, and we could see this one sliding further to the downside. Even actually you could drop it towards the 1.0924 just to be on the safe side, because that was that little spike lower that we had yesterday. So the 1.0924 could be that nice good breakaway level for lower areas. So keep your eyes on that one. Okay, guys, I hope you found it useful. Sorry for dragging this one a little bit over my time, but thank you for sticking around and watching until the end. If you want to join me later on at my Traders Tea time, as always, that's 13:15 GMT. We'll have a look at some of these instruments again, see how they've performed, and but for now, I hope you have a fantastic trading day, and I'll see you later. Bye bye.